On this channel, I've already shown you that if you adjust silver's 1980 high for M2 money supply, you're talking about roughly $650 silver today. But here's the part most people completely ignore. What if the money supply grows another 25 or 50%? We don't need a decade. COVID showed us that 50% M2 growth can happen in a single crisis. So if that repeats, what does silver actually have to hit to match the 1980 top? Let's recap how we've calculated that 1980 peak nominal dollars adjusted for the M2 money supply. And the first step in doing that is calculating the M2 money multiplier. And essentially to do that, you have to retrieve today's M2 money supply and divide it by the money supply during that peak in January of 1980. And doing that calculation gives us a multiplier of approximately 13. And then what we do for that is we calculate the adjusted silver price in today's dollars. And we take the 1980 peak and multiply it by this 13, this money multiplier. And so I've shown in the scorecard that I highlight on various videos a range where I said the 1980 silver peak was $32.75 to $49.45. And I think that's important because that blow off top, that range happened within 4 weeks. So when it happens in today's dollars, it's also going to be a peak that just surges and takes off and happens in very little time. And so that's why I always highlight that range and don't give one specific value. And so when we apply that M2 money multiplier in today's dollars, that range would be $429 to $647 an ounce. This is that range we have highlighted across multiple videos, showing that $429 to $647 an ounce printed within 4 weeks during that 1980 blow-off top when we adjust for the M2 money supply. And currently we're sitting at $61.87 an ounce after that correction from the close on Thursday to the end of Friday. So we're not even 10% of the way there. We're closing in on 10% of that range to get up to the 647. But as I said in the introduction, what's going to happen if we have another expansion of the M2 money supply of 50%? And this can happen like we had with COVID. And within 24 months, we had just about a 50% increase in the M2 money supply. So if we have another 50% increase, suddenly that 13x multiplier I showed you in the earlier calculation, it turns into a 19.5. And now we're talking about $639 an ounce to $964 an ounce in a blow-off top style. And so what can get us there? We've talked about the AI bubble, and some folks may be hesitant and say, okay, it's an AI bubble, it'll burst, but really, is that anything like COVID or like a great financial crisis that they would need to print so much? And I've alluded to this in the previous video, and I said, there's a lot of companies out there. Our whole economy is so tied up to the stock market. Everyone's 401ks are completely tied up to the stock market. There are companies where they can't even make money in their core business. They're making money through what is called non-operating income. So that's basically outside of the core business, they're making money, but in their core business, they're hardly making money or they're losing money. And when you deep dive on the non-operating income and the source of this income, nine times out of 10, they're doing it through the market. They're investing in the market, and the market is sustaining them above water. That's why I believe it is not far-fetched to have such a huge crisis that would generate another 50% growth in the M2 money supply. Now, the path to that 19 M2 adjusted peak, in my opinion, has 3 key milestones. First milestone was breaking the nominal all-time high, which, depending on what data source you use, is somewhere in that range of $48 to $50 an ounce. And we have achieved that. We have broken out and we have sustained above that level. Milestone number 2 is the 2011 high. And using the same methodology we just discussed, we translate that high to today's dollars, looking at what was the M2 money supply during that 2011 high, what is the money supply today, and adjusting by that factor, that's $122 an ounce. That's milestone 2. And then finally, milestone 3 will be achieving that 1980 M2 adjusted peak. Let's take a closer look at milestone number 1, breaking out above the nominal all-time high of $48 to $50 an ounce. And this is confirmed on the long-term monthly chart. I'm showing a chart here highlighted by Grady. I've mentioned him on previous videos. He's one of my go-to users for technical analysis on Twitter. And this is a long-term monthly chart using candlesticks going back to that 2011 high, which tested the 1980 nominal high. And what we're seeing here on the monthly levels is we have a confirmed and sustained breakout on a monthly chart. So this signals that there's a structural trend change in the market. The market has changed. We're now in a new phase of the secular bull market. Milestone number 2 will be breaching the 2011 high adjusted for M2 money supply. And that test of $48 to $50 an ounce in 2011, April 2011, it happened actually. If we apply that same M2 money multiplier adjustment logic, that projects to $122 an ounce. And I'm highlighting that by a chart of another user I've talked about on my channel. His name is Value Seeker on Twitter. This is his chart, and it's going back and basically adjusting silver. And at the center, they're showing the 2011 high adjusted for the M2 money supply. And in today's dollars, it's just a sliver over $122 an ounce. This is going to be the next major level to achieve. And it's going to require more participation beyond the folks that got in earlier. And let's talk about that in more detail. What drives milestone number 2? So in a couple of my previous videos, I highlighted the potential expansion of retirement account access, specifically the 401ks, into gold, silver ETFs, and even the miners. And so there was an executive order put in place in August that I highlighted in that video, and there's a policy decision deadline due on the beginning of February. So we're going to know by then if we're going to get a momentum shift where folks can put in sizable amounts of funds and start increasing their exposure into these asset classes. The other thing I talked about on the previous video when I talked about the yen carry trade, you need more of these momentum traders. I talked about that Wall Street bets crowd. That's 20 million of them, and they're not afraid to use margin and to use leverage via options. Right now, if you post on Wall Street Bets and you want to talk about gold or silver, you are the pariah. They will kick you out. They will downvote you. So until that we get some type of sentiment shift, at least a little bit from that crowd, I don't see us getting to those levels yet, to the 122 level. And then finally, to reach that final milestone, milestone number 3, which is going to be at least around 650. And if we have that crisis first and we have another massive tsunami of money printing, then it's closer to 950. And I don't see that happening until we have a sustained breakout above that 122 level. And that is going to be characterized by a more indiscriminate participation. Everybody's going to be in on it. Everyone's going to be talking about it. That's going to be the final stage for that final parabolic peak. Let's look at today's featured coin, the 2023 Mexican Libertad. And before we deep dive, I just want to bring something to your attention. I know over the last several years of collecting, one of the complaints from people who are stacking, they say, oh, Libertads, they're overpriced. The premium is higher than Silver Eagles. But if I'm looking right now at Apmex, whether it is a random year Libertad or a random year Silver Eagle, if you are not buying in size and you're paying with credit card, they are both pretty much at $75 an ounce right now. So that issue where folks were saying, you know, the premiums are higher for Libertads, they're pretty much even at this juncture. Now is a good time because I've covered in the past, and I'm not including 2025 stats here, because of the issue of Banco de Mexico has not yet published the official stats. But if we compare Eagles from its first year, 86, through 2024, and Libertad's first year, 1982 through 2024, the Eagles have over 676 million minted, and the Libertads only just over 35 million. That's a massive difference. So from a scarcity standpoint, the decision is very easy. So looking at our mintage tables, where does 2023 fall? Well, it's close to the middle of the pack, with a published mintage on the CM27 report in Banco de Mexico's website of 613,000 minted. But if you remember, and I talk about this thoroughly in my 2018 video where we highlight that piece, the colorization factor, where basically from anywhere from 50,000 to 100,000 pieces have been taken post-minting production by people that have nothing to do with Banco de Mexico, and they're colorizing, turning those 50,000 to 100,000 into little art pieces and sold for a steep markup. Well, that's taking away from the numismatic population. And so if we remove that colorization factor that I call it, then the true mintage is anywhere between 513,000 and 563,000. Let's take a look at the NGC and PCGS graded coin population. These are our top two grading coin companies. You do not want to diverge from these two. High top pops and other grading companies like I've highlighted in the past, like ICG, those are not legitimate companies. If you try to cross over a 70 from one of those companies, it is likely you'll probably get a 68 or a 67 if you try to cross it over at PCGS or NGC. So on the NGC side for 2023, there's been 7,586 total graded thus far, with a top pop of MS70 and 4,934 of those. Looking on the PCGS side, 2023, there's been 6,718 total graded, with a top pop of MS70 and 4,893 of those. And finally, let's look at some of our eBay comps for the 2023. Don't forget to turn on your sold listings filter and sort by ended recently so you get the latest auctions that finished. And let's find a 1 ounce. We're seeing some of the colorized ones I just talked about that are being sold. We do not see our first 1 ounce until down here on December 12th, sold from Apmex for $77.32. Here's more colorized ones. Here is a graded 2023 from PCGS MS70, went for $85. On the same day, another same thing, PCGS MS70, $94.59. And many more graded PCGS ones. Here is a 69 that went for $77. A 70 that went for $90.03. More colorized coins. And so that gives you an idea of what the sold comps are right now as of this past week. Don't forget to like and subscribe. Do your own due diligence. And I'll end this video with this warning. We're now in a new phase in the silver secular bull market. We're going to see a lot of volatility. And now traditionally, Wall Street has associated volatility with risk. I mean, you could listen to Michael Burry, who's talked about this in the past, and I believe in this. Volatility does not equal risk. I mean, if you don't know what you're doing and you're just purchasing without doing due diligence, then absolutely volatility can be very risky because big shakeouts will scare you. But this is the new normal now in this new phase of the secular bull market that you've seen since October. We're seeing these violent shakes in silver where it's spiking up several dollars in a day and down several dollars another day. So this is normal. We are going to continue to see volatility from this phase forward.